Hi there, thanks for coming back to the channel. My name is Mike Pitt. I make videos about marketing, business and crypto so you can grow your business, increase your profits and increase your portfolios. The title for today's video is 4 crypto project red flags that you cannot ignore. Before we get into the main content of the video, I'm going to put my socials on screen now. So if you're active on any of those platforms, follow me, I'll follow you back and we can communicate there. It's also come to my attention that not everybody is subscribed, so I'm going to put a visual on screen now, and this shows the breakdown of subscribers and unsubscribers on the channel, and I'd like more of you to subscribe. So if you get value out of this video or any of the other videos on my channel, please subscribe. Okay, let's get into it. So it's a slightly different approach to the video today because I normally do an analysis of a particular project, a particular coin, and you've seen lots of those on the playlist, and I'll put a link to that playlist on the top of the screen now. Today I want to look at some red flags, some of the necessary steps I take when I'm looking at a project to find out and to assess and to do my own research, so that I can come to a decision about whether I should invest in this project or whether it's something I should stay miles away from. So the first of those is the team not doxed. And for those of you not conversant in sort of internet speak, doxed means the names aren't publicly known, they're not in the public domain. So if you're researching a project, and obviously the project should have a website, white paper, Twitter, usually a Telegram, sometimes a Discord, all of these different communications platforms and social media platforms associated with the project. And across all of those, you should really have the people behind the project should be communicated. So the team should be publicly known. So if you're thinking about, I think Cardano, you've got Charles Hoskinson, and then with Ethereum, you've got Vitalik. So those are 2 people that I've spoken about in the respective videos, the one for Cardano and the one for Ethereum and Ethereum 2.0, etc. But if you can't find the people on the website, so there's no about us with pictures, names, links to LinkedIn pages, LinkedIn profiles, and so on. If you can't find all of that information, that's very suspicious, and it's a very obvious, in my view, it's a very obvious red flag. So the first thing is team not doxed. The team needs to be actually in the open, and you can find them. They've got Twitter accounts, they've appeared, preferably they've appeared on interviews, perhaps on CoinDesk or Cointelegraph or a number of other different relevant cryptocurrency media outlets. Hopefully they're quite visible and quite accessible. That's number 1. Number 2, the project has no real utility. Once again, let me break that down for people who are not that conversant or that au fait with different terminology in the cryptocurrency space. No utility means what problem is the project solving with technology. If there's no problem and there's no real use case for the coin, the project, how is it going to prosper? How is it going to survive? Remember, there's over, I think, 13,000 different cryptocurrencies. So if it's not really achieving anything, the project behind it, it's not a project that I would consider investing in. So when people talk about utility, it's like, what problem is it solving? How is it solving it? So we could say, for example, there are a number of different blockchains. We're all aware of that. And something like Polkadot is trying to connect all of those different blockchains so they can communicate with each other. You can see there's a problem there in the cryptocurrency sector. Different blockchains, it's not one blockchain, it's lots of different blockchains. How do they communicate with each other? So those projects that are tasked with solving that, making them interoperable, are valid projects in that respect, because people know there's a clear problem there and that's the solution, how to solve it. So if you're looking at reading the white paper, or you're reading the anything else on the website, any other material on the project's website, you're thinking, what does it do? What are they solving? Where's the use case? Who's going to have a demand for this project? And you can't answer those questions. That's another very clear red flag. The third clear red flag is If you've first heard of these projects, a particular project, and it's offering unsustainable return on investment. So let's say, just pick a number out of the air. They're offering that you invest your coins, it may be a top 10 cryptocurrency that you're holding, Bitcoin, Ethereum, etc., and you invest that in this new project, and they're promising you 10% interest, and that would be expressed in an APY, perhaps, annual percentage yield, 10% interest per day. And you're thinking, 10% a day? I put 1,000 in, and it's going up 10% per day. That's obviously way in advance of anything that any banks could offer you. If there's something like that, it's an offer where you think people are doubling their money in a week or whatever, or they're trebling or quadrupling, and it seems too good to be true. Often it is. So what happens in many of those cases is that the money comes in from customer A, and then customer A gets very excited and recruits other people by means of a video or email campaign. More people come in, and the new people come in, end up their money goes to pay customer A who came in first. It's a bit like a Ponzi scheme, and it's not a robust project in that sense, and they can't continue paying, let's say, 10% daily interest or 5% daily interest, and there's lots of projects like this. When you dig into the details, you think, well, how are they going to be able to deliver that interest, because they're not earning enough revenue from the activities that they're undertaking. Sometimes there is utility to these projects, and sometimes there doesn't seem to be. They say, we're going to make some investments, and we're going to carry on the basis of these investments and our performance, we're going to carry on paying 10% interest per day or 5%. That's unsustainable return on investment. If you see that, some people who are perhaps not able to act as rationally as they should, they might emotionally think yes, or the greed might kick in. They think, yes, I want 10% a day. I'm going to be, a millionaire by the end of the year if it carries on like this. If I put all my savings into this and I'm getting 10% a day. And that's what some of the people behind these projects are counting on. They're counting on the greed to kick in. So when you see something with an unsustainable return on investment, and you can't understand how they're generating enough revenue to cover that, run the other way. That's another red flag. And the fourth red flag I want to discover today, and if this is well received, I might make another follow-up video, because there are other things to consider as well. But the fourth red flag for today is in the area of token metrics. So token metrics concerns the amount of coins that are associated with a project, so how many are created, and then how those coins are distributed to people, either in private sales, public sales, or to the founding team, and so on. So there are some issues to consider are, do the creators, the founders, have too much? So perhaps the founding team or the founders of the cryptocurrency are holding on to 50%, in which case that cryptocurrency coin is highly centralized. So the essence and the spirit of cryptocurrency is to move away from the centralized banking system and reliance on particular individuals and institutions controlling everybody and controlling the currencies and so on. They're moving away from that. That's the whole spirit of cryptocurrency. So why go from that to a cryptocurrency where the founders are holding sort of 50%? They could just dump on the market. They can easily manipulate the market by having that much leverage. So that's another concern, but that's not the only concern in token metrics. Another concern could be that they're printing far too many coins. We all know, or those of you who are experienced in the cryptocurrency sector will know, that one of the strengths of Bitcoin is that there will only ever be 21 million Bitcoins available. Full stop. That's it. Some of these coins and some of these projects are creating far too many coins. So you can imagine if they're creating 10 billion coins, that's more than one for everybody on the planet. And those coins are, in my estimation, my opinion, virtually useless. They're like Smarties, which is a popular sweet, particularly in this country. I think it's global as well. I should really look into that when I do the editing. But too many coins is not a good thing. Too many coins means the oversupply, the demand's never going to go that high, and your unit, the value of your individual units for coins is never going to be that high unless there is some kind of strategy to earn coins and reduce that value. But it's much better to go into a project, to invest into a project that doesn't have so many coins. So always look at the market cap in terms of obviously the value, but look at the number of coins that will be the maximum number of coins that can be in circulation. It's very important, and there's never going to be enough demand to soak up all of that supply. So the value of the coin will always be low. Those are 4 clear red flags I run through with any project I'm considering investing in. So I hope that's been useful to you. I made a TikTok with the same title as that. So this is the long version and the full explanation of what I meant in that very short TikTok. So thanks for watching all the way through. If you've enjoyed this and got value out of this video, please give me a like. The algorithm respects likes and it will show this video to more people. Please, if you want to watch another video, click on one of the 2 thumbnails on screen now. I look forward to speaking to you next time. Thanks for watching. Bye bye.